Hello, this is Anna from annacooling.com. Now, we've all heard of the Fosbury flop, which revolutionised the sporting world of high jumping, but sadly the same could not be said of Janet yesterday, who delivered her equivalent effort of the Fed flop. Unscheduled and tentative news releases, such as the one highlighted in yesterday's economic calendar, can cause markets to become nervous and uncertain, not only on the content of such a release, but also the timing, with the tentative nature of the release adding further to the uncertainty. Indeed, the last such announcement from the Fed was back in December 2012, with one a year earlier in November 2011. And given the infrequency of such announcements, the major US indices duly went into consolidation ahead of the announcement. But we need not have worried, nor indeed should the markets, as Janet delivered another damp squib, with the markets drawing a collective yawn before moving on to consider the prospect of the impending, or not, rate hike in December. Moving to the technical picture for both the YM E-mini and the NQ E-mini, both are now at key technical levels on the daily time frame, but for different reasons. If we start with the daily chart for the YM December contract, the level tested yesterday in the 17,800 area is one that has been tested several times during November, but is now starting to build a very solid technical barrier to any further progress higher. This region is clearly defined with the blue dotted line of the accumulation and distribution indicator, and was the trigger for the recent reversal earlier in the month, which saw the index move off this region and back down to test the 17,100 region before rallying to test it once again. What is also interesting in the recent rally is that the move higher has been accompanied with falling volume, and whilst we can expect volumes to be lighter in the run-up to both Thanksgiving and also Christmas, this is a worrying signal in the short term. In addition, for the YM, but unlike the NQ, the price action has yet to penetrate the long congestion phase of earlier in the year, which saw the index trade between 18,000 to the upside and 17,200 to the downside. And until this strong area of potential resistance is breached with conviction, we are likely to see further congestion prior to any breakaway and move higher. However, below on the volume point of control, we do have a high volume node in place at 17,400, which should at least provide a platform of price support in any reversal lower. For the NQ December contract, the technical picture here is a little different. And as in earlier in the year, this index has been leading the way for its sister indices. The key difference here is in the breach of the longer-term congestion phase, which occurred in late October, with the index surging through this region in the 4,550 area and continuing higher on this platform of support. This is in contrast to the YM, which remains within this area and has yet to break through. The reversal in mid-November for the NQ then revisited this region before returning to test the 4,020 area, and like the YM is now building into a solid area of price resistance, and one that was tested again in yesterday's trading session. In today's early trading, the NQ has moved lower to currently trade at 4,651, but with the platform of potential support now in place below in the 4,580, this should help to provide a cushion to any deeper move in due course. Whilst the technical picture for the two indices is a little different, where we have complete agreement is in the associated volume profiles, and once again for the NQ, we have a market rising on falling volume, which is signalling potential short-term weakness. For the longer term, both indices now need to break through their respective stubborn areas of resistance. But of course, much will depend on Janet and her fellow Fed members and the decision next month. Let's hope we don't see another flop from Janet. Thank you for joining me today, and see you again next time.